Former President Donald Trump launched a scathing attack on Federal Reserve Chair Jerome Powell. On April 17, 2025, Trump took to his platform, Truth Social, to call for Powell's immediate termination. Trump's message was clear: Powell must go. It cannot come fast enough. The former president's frustration stemmed from what he perceived as the Fed's inaction in the face of economic uncertainty. Trump specifically criticized Powell for not cutting interest rates. He contrasted this with the European Central Bank's approach. The ECB has implemented 7 rate cuts in the past year. Trump sees this as proof that Powell is out of touch with the needs of the economy. He went on to label Powell's recent economic report a complete mess, further fueling the fire of their ongoing feud. This latest attack is not an isolated incident. It is the continuation of a long-standing pattern of conflict between the two powerful figures. Trump's unrelenting criticism and calls for Powell's removal have raised serious concerns about the future of the Federal Reserve's independence. The timing of Trump's outburst is significant. It comes just a day after Powell issued a stark warning about the potential damage of Trump's own trade policies on the U.S. economy. This public clash has once again thrust the relationship between the former president and the Federal Reserve into the spotlight, leaving many to wonder about the potential consequences for the nation's economic stability. The relationship between Donald Trump and Jerome Powell has been tumultuous from the start. Appointed by Trump in 2018, Powell quickly became a target of the former president's ire. Trump repeatedly criticized Powell's handling of the economy, often taking to Twitter to voice his displeasure. In 2019, Trump escalated his attacks, labeling Powell the enemy for raising interest rates. He even threatened to remove Powell from his position, a move that would have been unprecedented in modern U.S. history. Despite the constant pressure and public criticism, Powell remained steadfast in his commitment to the Fed's mandate of maintaining price stability and maximizing employment. The COVID-19 pandemic brought a brief respite from the conflict. Trump praised Powell for cutting rates during the early stages of the crisis. However, this truce proved short-lived. As the 2020 election approached, Trump once again turned on Powell, blaming him for not doing enough to boost the economy. Even after leaving office, Trump has continued to attack Powell's leadership. His recent call for Powell's termination is a clear indication that the animosity between the two men remains as strong as ever. This ongoing feud raises serious questions about the politicization of the Federal Reserve and the potential erosion of its independence. Just one day before Trump's latest attack, Jerome Powell delivered a sobering message at the Economic Club of Chicago. The Federal Reserve Chair warned that the tariffs imposed by the Trump administration posed a significant threat to the U.S. economy. Powell's remarks highlighted the growing concern among economists about the potential fallout from the trade war initiated by Trump. Powell characterized the tariffs as significantly larger than anticipated. He argued that they were creating unprecedented challenges for the Federal Reserve, forcing the institution into uncharted waters. The tariffs, according to Powell, were disrupting global supply chains, increasing costs for businesses and consumers, and creating uncertainty in the markets. The Fed chair also expressed concern that the tariffs could lead to higher inflation and unemployment. This is a double whammy that the U.S. economy is ill-prepared to handle. Powell's warning served as a stark reminder of the potential economic consequences of Trump's protectionist trade policies. The timing of Powell's speech, just before Trump's renewed attack, suggests a direct link between the two events. Trump's anger at Powell's warning underscores the former president's unwillingness to accept any criticism of his policies, even when it comes from experts tasked with safeguarding the nation's economic well-being. Section 4. The Fed's independence under fire. The Federal Reserve was designed to be an independent institution, free from political interference. This independence is enshrined in law to ensure that the Fed can make objective decisions based solely on economic considerations, rather than bowing to political pressure. However, Trump's repeated attacks on Powell and his calls for his removal have raised serious concerns about the future of the Fed's autonomy. The legal protections for the Fed's independence are being tested like never before. While the president appoints the chair of the Federal Reserve, removing them is a different matter altogether. Powell himself has maintained that removing a Fed chair prematurely is legally prohibited. He points to the Federal Reserve Act, which states that governors can only be removed for cause, such as negligence or malfeasance, not simply because the president disagrees with their policies. However, the legal landscape surrounding the Fed's independence is complex and evolving. The Supreme Court is set to revisit Humphrey's Executor v. United States, a landmark case that established limits on presidential power to remove heads of independent agencies. A decision in favor of expanding presidential power could have significant implications for the Fed's ability to operate free from political influence. Section 5. Global Reactions and Concerns. Trump's attacks on Powell and his threats to the Fed's independence have not gone unnoticed on the global stage. International leaders and financial institutions have expressed concern over the potential damage to the credibility of the U.S. central bank and the stability of the global economy. Christine Lagarde, president of the European Central Bank, has publicly expressed her respect for Powell and the work of the Federal Reserve. She has also emphasized the importance of cooperation between central banks around the world to address shared economic challenges. Lagarde's statements can be interpreted as a subtle rebuke of Trump's attempts to undermine the Fed's independence, highlighting the international community's unease at the situation. Within the U.S. government, Treasury Secretary Scott Bessent has voiced his support for the Fed's independence. Bessent has warned that undermining the Fed's credibility could have dire consequences, potentially leading to higher inflation and economic instability. His warnings echo the concerns of many economists who fear that politicizing the Fed could have long-lasting negative effects on the U.S. economy. Section 6. Erosion of independence, a broader pattern. Trump's attacks on the Federal Reserve are not isolated incidents. They are part of a broader pattern of behavior that has characterized his approach to regulatory agencies and independent institutions throughout his time in the public eye. Trump has consistently sought to undermine the authority of institutions that he perceives as opposed to his agenda. A prime example of this pattern is Trump's recent firing of 2 Democratic members from the National Credit Union Administration Board. These dismissals, which occurred just days before his renewed attack on Powell, further fueled concerns about Trump's disregard for the independence of regulatory bodies. The NCUA firings followed a similar pattern of dismissals at the Federal Trade Commission. In both cases, Trump removed officials who were critical of his policies, raising alarms about his willingness to politicize independent agencies. This pattern of behavior extends beyond economic institutions. Trump has also attacked the media, the intelligence community, and the judiciary, consistently attempting to discredit and undermine their authority. His actions suggest a deep-seated disdain for the norms and institutions that underpin American democracy, further fueling anxieties about the long-term health of U.S. governance.